Good morning, Paul Georgie from Allendale. It's September 22nd, 2010. Well, the grain market's going to be higher here this morning, basically because of the weakness in the dollar. We've seen another sharp break in the dollar overnight. We broke hard 100 points yesterday, down another 50, 60 here this morning as we speak. All off of the Fed's comments yesterday that maybe the economy isn't quite as good shape as the Obama administration the day before said. So that is causing some weakness in the dollar, causing the crude oil to be pretty much steady to a little higher here this morning. Stock market's lower, and it's caused the gold market to make new all-time highs here overnight, very near the $1,300 an ounce level. The grain markets, corn has stayed in the trading range here between $5 and $5.17 is the range that we're looking at right now, but higher here in the overnight session, up 4 to 5 cents. Expect that we probably will be in that range here this morning on the opening, off of excitement, fun buying again, carrying over from the other commodities and the news in the financial markets. However, some of the fundamental news that we've got out here this morning: Japan buys barley overnight. Also, a group of traders now are talking about corn yields being in that 152 to 156 range, with still most indications should be around the 160. We really doubt if the government would adjust the yields that much in the October report, but that's going to be talked about, and certainly that news is supportive to the corn market. Funds were big buyers yesterday. They were buying overnight. It's estimated they bought around 7,000 contracts yesterday in a sideways market, which is kind of unusual. Normally when you see the funds buying this amount of contracts, it usually causes the market to be sharply up, and we didn't see that yesterday. Over in the soybean complex, main focus there is China is off for a few days. They've got holiday over there for Wednesday through Friday, so they won't be in the market buying anything, and that's why we've seen big purchases yesterday, and some traders even thought they should be bigger than that. The weak dollar is the reason for the strength in soybeans, and there the soybean complex is flirting with this $11 area in the November contract. We hit in the 1090 range here overnight. We expect good resistance around this $11 area. If we break through there, it certainly opens the gate up for a move up to the 1020 area or 1120 area. In the wheat market, we've got Egypt in looking for one cargo of wheat. Probably won't be buying it from the U.S. Russian farmers planted more wheat here in the last week, up to 8.1 million hectares, still about 25 to 28% less than last year, but with the rain, and we still have time to plant wheat in Russia as well. So with some of the moisture they've had has given them the ability and the reason to go in and plant more wheat instead of in the extremely dry soils that they've had there in the past. So farmers are going to plant wheat. If they don't plant winter wheat, they may come in and plant spring wheat. So we'll see and should see greater production in those acres in Russia here over the next coming year. So wrapping up the grain markets, expect everything to be higher. Watching the funds, see where they go here today. If they're in buying, we certainly are going to go higher. In the cattle trade, choice product was up 76 cents with a select down. I think that we're seeing a wider spread there in the choice select area, which is indicating we've got tighter supplies of cattle. However, packers had to pay only $98.50 in the south. They paid $155.50 in the north as the top price, and then futures sold off yesterday late. So it's going to be a tug of war again to clean up those feedlot inventories this week at this basically steady to a little higher money than we had last week. Hog market looks strong. We're a little weaker here overnight, but cash market steady firm. Product off a little, but that market's been like a yo-yo in the product trade. Futures markets knocking on this recent highs and contract highs, so we expect that we could see some follow through there today and testing of those highs as this weaker dollar should be supportive to potential export business and keep this hog market in a firm tone here. We do have the USDA Hogs and Pigs report out on Friday. All the details that are in the Allendale wake-up call and Allendale research products. So if you get that, you'll get the Allendale's estimates. But trade's looking for anywhere from a 1 to 3% reduction in most categories, in the major categories anyway, and that is going to give us an idea of what kind of domestic demand we might have for corn down the road, as if herds are larger or smaller than expected. So if you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We'll try to answer any questions you might have. We wish you a very successful trading day, and we'll talk to you tomorrow morning. Thank you.